Hello and welcome to this very special edition of Crystal Ball again. It's been a very, very good comeback for the market in the month of March since the day of the budget. We're up about 12-13% from the lows of 68,6,900. As we go into another earnings month in April, will global markets support us to carry on with this momentum? Madhu Kela of Reliance Capital joins me to talk about that. Madhu, good to see you again. It's been a terrific comeback to say the least. But from here on, how are you feeling about the market, having come up all this way?
Just to take you back, last time when we interacted, Nifty was around 8,000. We discussed the possibility of markets going up to even 7,200. And if that happens, I think we agreed that fall should be bought. So my experience is that whenever you buy the fear, obviously you make much superior return. Now things are looking very stable to everyone, and including me. I think the last data of the month of March, specifically the auto sales which I am seeing, the cement sales, everything seems to be pointing out that things are stabilizing. So I think on the domestic front, worries have receded significantly. However, we still live in a very, very fragile global environment. And, I will not rule out during the year that will there be another leg down because of the global factors. So that is something which I can't see today, but that is not ruled out.
What is the prognosis in this kind of a scenario, Madhu? Do you have the confidence to keep investing in this market and say the market has turned the corner? Or is that view only till the point where global volatility surges once again and we have to take stock of that situation once again? Is it a live every month or every quarter as it comes kind of a situation still this year?
I think, Ujjain, the whole point is that, if you buy the fear, so let's say if you are a regular investor, that is the best way to invest, which is what we have been basically advocating all this while. So for a retail investor who is not in the market, systematic investment is the best way forward. However, if you are someone who has been in the market, so you should always keep a little bit of dry powder in your back pocket for that kind of volatility. If it happens, then you can take advantage of that. Because, I think, while everyone is become very logically that you can anticipate what is going to happen, global trouble. But so have the central banks. Just as the trouble starts to happen, they are ready with the remedy. But we are not too sure whether it is so simple to fix all these problems by reacting to them. So as I said, to be honest with you, I'm not too sure that what kind of global volatility will happen in this year. But I will not rule that out. We discussed about the Chinese concern. So, for the time being, they are being fixed. But the China's debt problem is not being fixed. The China's currency problem is not yet being fixed. So we don't know whether those things will erupt again and they will cause volatility. My only point is that you keep systematically investing. But if the volatility happens, then you have to buy with conviction those dips. And that's the way. And as far as India is concerned, I just want to point out one important observation which I'm making with them, and this is my interaction with a lot of people, that last 2 years the government has done significant amount of cleanup. And when you do cleanup, you have its own repercussions, at least in the short term. And this cleanup is being extremely widespread and less acknowledged, as I would like to put it. Now, the cleanup is starting with the government, with the bureaucracy, with the ministerial level corruption going down, but the bank cleanup, the corporate sector is cleaning up the entire balance sheet. A lot of people who want to keep their head high are in the process of selling assets and selling stakes. So, you are seeing cleanup at the subsidy level that, the subsidies is now intending to reach to the right people. And the most important, I just went to Raipur and I was talking to a couple of small traders. There is, awareness even at that level that now we need to pay our taxes. We need to keep our accounts in a more straightforward manner than what we have been used to. So all of this has caused some pain in the short term. But I think if you take a 2-3 year view, this will all have a very, very significant positive impact on the markets.
What are domestic investors doing, Madhu? What's your observation there? We're talking to people because we've seen some steady sell figures over the last few months. How would you break up the kind of selling that we're seeing, what mutual funds are experiencing, what investor psyche is in the light of the January-February fall?
So I think, domestic investors bought for the last 7-8 months because the flows were very, very strong. I do not think that any of this selling which has happened in the last 10-15 days has got actually to do with any net redemptions. Because we have not seen any net redemption industry-wide. So money is still coming in. This is just, it looks like a tactical call of people who have bought through the year, bought at lower levels. It might be just a tactical call, or maybe either keeping little bit amount of cash in the portfolios or switching intra-sectors. So, but I do not ascribe this selling to any kind of redemptions which is taking place in funds. But if you, and again, what the FIs have done is even more heartening, and that is what gives me confidence that the medium to long-term India story is on track. So they took 8 months for a 45,000 crore sale figure to happen, and they took 1 month to put back 25,000 crores in the markets back. So that gives you some kind of a confidence that, the moment the global volatility recedes, and there is a little bit of clarity in the global markets, FIIs want to put more and more money in markets like India.
What would be a good asset allocation call now, Madhu? Because interest rates are also coming down, which means that many of the fixed income funds might also be able to give you 10% kind of returns. Do you think from here on, after this rally, you can get double-digit returns from equities over the next 12 months?
Again, Udayan, I don't want to avoid this question, but 12 months call and a 15% return is a tough one. From here, I would not rule that out. But if you are preparing from a 2-3 year perspective, then I think 15% return is very, very, very possible annually, even from here. And that too, I would not say that those returns are possible in an index if you construct the right portfolio at this point of time, which is what the asset management companies like ours strive to do. Then I think 15% kind of return is very possible.
What's your sense of earnings now? Because we are about to hit another earnings season very soon. The kind of green shoots that you're seeing in sectors like cement, autos, do you think that will translate into any kind of earnings surprise in the current quarter, or do you still need to wait a couple of quarters before you can get something which cheers the market?
I think this is the most important and interesting question you raised today, because earnings have been disappointing for last 8-10 quarters. Every year in the beginning of the year we say that we are going to grow 18-20%, and that is the consensus this time also. That broadly the earnings are expected to grow 18-20%. There are some sectors which are even expected to grow 30-40% in this year because of the low base of last year. So I have much more confidence in the prediction this year than I have had in the last 2 years personally, because I think the base is low. We are already seeing some kind of a revival in some of the sectors and the companies, and in our interaction with the companies, even they are sounding far more positive and constructive. Now, whether will it be equally spread over the next 4 quarters? That is difficult, and that doesn't look like. So maybe in this current quarter, again, you will see challenges in some of the public sector bank results and some of the stressed companies' results. But if I take a 16-17 call, and if you tell me that, am I convinced that the earning growth will be above 15% for this year? So I can say with a very high degree of conviction that this year there will be a 15% plus earning growth for the year as a whole, 16-17. And the other point, Udayan, is that these stress sectors which have been disappointing for the markets as a whole, their overall weightage has come down so significantly that all stress sectors and companies put together are only constituting maybe 15% of the overall Sensex weightage. So any which way, it doesn't matter if that stress marginally continues there.
I just want to talk about this 15% number on the earnings growth that you're talking about, Madhu. A large part of that might have to do with the base effect. How does the market deal with this kind of a situation where optically you get a lot of earnings growth, but that is largely to do with the very low base of the last couple of years? Does the market automatically start to see PE expansion because of that percentage growth? Or does it wait to see some kind of normalization of earnings, and on that new base, how earnings are progressing from there on?
So I think the earning growth itself will be a good breather for the market, Udayan, because we have not had any earnings surprise for the last 10 quarters. So, there are two sides you can look at this whole earning growth. The fall also was of some base. So, obviously, whenever you start the tough, it always created, the bottom is created, and from there only the earning growth expectations are built in. So, I would not be, I wouldn't say that the market will not be pleased to see this number just because they are coming from a low base effect. The question is, can I see on top of this year, can I see another 15-20% earning growth for 17-18? So I think if we put that base this year of maybe 15 to 18% earning growth, there is whatever numbers which we have done, there is a strong possibility that even on top of that, there could be another 15% earning growth for 17-18.
Time for a break on Crystal Ball. We'll return with Madhu Kela of Reliance Capital in just a bit. Don't go away.